What are the implications? Why is this significant?
Well, it is significant because I think fundamentally China really needs to increase their productivity, and service sector, especially financial sector's productivity, is really the area China should focusing on. So getting global leading financial institution to come into China, operates, and help the growth of the overall market is very critical.
And are you getting any sense that any of the Wall Street firms and foreign firms are getting cold feet about expanding their footprint in China, given everything that we've seen here, whether it's the economic slowdown, the restrictions even on foreigners entering China right now? Is any of that hindering the appetite?
Well, I think it's very sort of early stage in terms of what is the impact. But overall, what we have seen in terms of the business planning and the investment planning into China from global players has been quite encouraging. And you heard some of the latest news where some of our peers catching up to take on 51% ownership for their local securities JV, and also we have witnessed quite a few outreach from the domestic Chinese regulator to really understand the overall implication of global financial market into China.
Tommy, what sort of barriers do you still see? Because how does a foreign investor crack into a market which has been dominated by government-controlled rivals and that have very long-standing relationships with clients? And also, some say the application process is still quite opaque.
Well, you are definitely right. It is not easy. And, my senior advisor has always been emphasizing this three key letter, PRC, which stand for patience, relationship, and commitment when it comes to China. So therefore, to overcome those barriers, I think for global financial institutions, we all need to find the right partners to enter into the China market in various ways. And obviously talents and find them and then develop and retain them are also very critical.
Tommy, what are you telling your investor clients?
Tommy, I want to get your
those high net worth individuals. What are you telling them about how they should position in the Chinese market now?
Well, I think first and foremost, we want to make sure our clients are safe and stay connected with us. So obviously, globally, we're dealing with the health crisis. A lot of the economic and financial implementation, the implication are still yet to fully transparent to the investors. But overall, we do expect the policy globally will be accommodating. And so my view is, so I'm more of the view of a V-shaped recovery, just given that the overall global economy and especially China and then some of the key economy has come off so much. So the underinvestment risk at this stage will be higher than overinvestment.
Consumer staples on the CSI 300 have outperformed. It seems like it's a little bit more of a defensive play. Does that send you signals that things are looking still a bit ominous of just how much more we could see in this rally?
So for financial market, it's still too early to tell, where the bottom is. The key focus is really on dealing with the health crisis globally. And then financial sectors will be really reflect to how the health crisis has been contained and also how the fiscal and monetary policy will be effective. So it is a bit early to tell, and we do expect China will probably be 1 or 2 quarters ahead of the rest of the world in terms of overall production recovery. And then Q2, the number from developed world from the U.S. will be pretty bad.
Are there certain sectors that you're watching out for that perhaps could be a little bit more resilient to the market volatility we've seen?
As you point out, I think defensive, and then looking for so obviously cash in terms of weather the storm, and also earning visibilities, and obviously different sector would naturally react to the health crisis very differently. So we're recommending client to look at defensive name, some of the utilities sectors, and also with earning visibilities beneficial to this sort of a working from home, internet, digital space. So those are the industry has higher visibility. But overall, I think it's still too early to tell, and we're at the same time advising the client to be be watchful for underinvestment risk as well.
Yeah, Tommy, does the follow the policy investment thesis that some track here in China, does that hold more water at times like this, at times of economic crisis and pressure?
So Tom, I definitely think for China, they have more policy rooms to maneuver, both from physical front and also the monetary front. And we talk about a relaxation, and there are quite a few foreign relaxation-led policy we're still looking forward to, such as QFII relaxation. So there are quite a few things the market are looking out for. But first and foremost, we need to make sure that the health crisis is well addressed and people can be safe to go back to work.